Excellent. There we go. And today with me, I have Matt Schaubroeck. How's it going, Matt?
Doing great, Bill. How are you?
Oh, pretty good. Awesome. Okay, so yes, let's see here. It's one of those days when you don't give too much thought to what you're going to say before you do all the setup. So now when the moment has finally arrived, you just hope that you have your ducks in a row. So just
unlike talking to investors, in which case you should plan everything out far ahead of time.
That's right. Exactly. Okay. So just some housekeeping stuff off the bat. This is my secondary channel, The Company's Expert Live. So if you are interested in these live chats, please subscribe to this channel. However, my main channel is called The Company's Expert. There's a link in the description. So I would encourage you to go over and check that out. Also, I have two Facebook groups. One of them is called Entrepreneurial Success. So there's a link to that too. So if you're looking for a place where you can find like-minded people where we could get together and talk about this kind of thing, then consider checking that out. So with me today, of course, is Matt Schaubroeck. Matt is the CEO of ioAirFlow, a green tech company here in Winnipeg, and has some experience, as I do, with getting financing and navigating that entire world. So that's going to be the topic of our chat today. So once again, greetings, Matt.
It's good to be back, Bill, and have another conversation about the all-important question on dollars for startup financing and when to find them and how to find them, and some good tips and tricks on how new founders and startups can find the dollars that they need to help their business be a success.
Yes, exactly. This is a hot topic. It's on the forefront of the mind of a lot of people starting up businesses, whether they're doing innovative startups like tech type startups, or they're just starting up a small business. This is going to be something that a lot of people are curious about and a lot of people have questions about. And I see so far somebody has said in the chat, hello, I wish success to you all. Well, thank you very much, Andre, if I'm saying that right. Andre, thank you for that. And if you have any questions, please feel free to jump in. So today we're going to be covering several things. And I believe, Matt, you wanted to start things off by talking about the dreaded networking event with investors. Would that be a good place to start?
Let's jump in there, yeah. Because I know, Bill, we've talked before about what is of value when you're an early founder just starting off. And really, you are the company, you are the brand, and it's really important to get out there and have your face be known and have your reputation be known. And the best way to do that is by going out in person to events, which is not easy. And it's something I'm not a big fan of, going off and putting myself on a spotlight all the time. It's a difficult thing to do. Maybe as a millennial, it's even harder because we're used to texting and emails and IMs. But there really is no substitute for going and shaking a hand, maybe not these days physically shaking a hand, but in every other way. Go and look someone in the eye and explain to them who you are and what you're doing, and you're going to leave that impression. That's going to go a very long way when you're building that relationship with investors or mentors or anyone else you're trying to build a network with. Yes,
that's absolutely correct. It can be a very nerve-wracking thing, especially for people that are more introverted, that don't come from a sales and marketing background. And at some point during this entire process, you are going to have to meet potential investors in person and be able to have a conversation and be able to clearly and in a very compact way, be able to present what you're looking for, what you have, and being able to answer some questions. So it needs a little bit of preparation and a little bit of rehearsal. And that's where things like elevator pitches and things like that come into play. So it seems like there's a lot of people talking about elevator pitches and that kind of stuff. If you go on the internet and you Google it, there's a lot of resources there. But less so in terms of how to connect with these investors or potential investors. Like how would you know of a networking event? How would you become aware of it? And how would you get invited to it, or would it be appropriate for you to show up?
Well, look, I mean, there's no shortage of events that happen in most cities. If you're in a big city like we're in Winnipeg, which is a fairly big, medium-sized city,
Mhm.
and there's always events to go to. And the way to find those out is to start building your network and look at other calendars. So industry associations or the startup community generally go on Meetup. Go and find other founders and see what they're going to. Ask if you can tag along. See if you can be a plus one at any events. If there is any dinners, if you're talking to your lawyer, ask your lawyer if there's any events coming up. They're usually pretty well connected into the social scene. Go back to your university and your campus, or there's really no shortage of potential opportunities there. Or honestly, just go to a sports event when those are allowed again, right? Go and see if you can find someone. If you know someone's going to be going to a game, go to that game. And it's a nice casual place to strike up a conversation, and you can do it in a fairly stress-free environment. There's no bad place, I think, to go off and do some networking. Just you have to be used to it. And to go back to your point about practice, Bill, practice is the best thing you can do, especially when you're starting out. You want to run that pitch and what you're going to say to someone over and over and over until it is as natural as breathing. And it sounds goofy, and it feels a little goofy to do when you're starting off, to try different language, and maybe you're going to rehearse it in front of a camera or in front of your friends or your parents. But that really does help. It goes a long way. It gives you the confidence, and it also helps work out those kinks. You don't want to be using ums and ahs or stuttering over your words when it's showtime. So
yeah, definitely. I mean, I think what a lot of people probably who are tuned in right now are probably wondering is, I mean, how do you get to these events? Now, you mentioned sporting events, you mentioned some events happening around your city that you could discover through things like meetup.com and other type events. But maybe just getting into that a bit deeper.
Sure.
Obviously, it's going to depend. Now, some places they have a very, very formal environment for investor financing. You know, if you're in Silicon Valley, it's obviously going to be different than if you're in a place like we are in Winnipeg, Canada, where we're more of a typical city, which is not based on. The economy here is not primarily based on tech innovation. So there is a community, but it's not the primary focus of the city. It's not very formalized. So I think a lot of people, they have in their heads that you would go to something that looks more like a pitch competition, and you would get up on some kind of a stage in front of a crowd of potential investors who are sitting there in their suits with their martinis, and they would be listening to very formal pitch competitions like you would see on Dragon's Den or something like that. Now, that's not a typical situation that you're describing, right? It's a little bit different what you're talking about.
Right. Well, so here's my thoughts on pitch competitions. They're valuable. There's no question. There's a lot of good that comes from them in terms of practicing and refining your pitch in a semi-safe space. It's great for exposure, and you might get some prize money dollars out of it. I haven't seen very many pitch competitions where there's real investments dollars coming on the table. Not to say it doesn't happen, but it's certainly more rare.
Yeah, I would agree with that too. Yeah.
The real investor dollars, if you're going and trying to raise money, you're in a boardroom or you're in a closed door environment, and it's not a 15-minute time constraint with 5 minutes for questions. You're talking for 60, 90 minutes. Now, but again, the pitch competition is a great way to network because you're going to have that community there, and you're going to have everyone that will be able to provide you access with other people, or maybe there are investors directly in that room. And what you're trying to do, as with any networking event, is leave an impression. You want people walking away from whatever event you're going to saying, that was really interesting, I want to know more. And that's the goal of first contact point, whether it's at a pitch competition or a hockey game or whatever the case might be. You want to leave that impression. Yeah,
see, that's what I was getting at. I mean, I think everybody, at least in my experience working with startup founders and things, before people really get into this world, they have in their head this image of it's going to be a big pitch competition. It's going to be very formal, and you're going to have to get up on a stage. You're going to have to deliver a pitch in a very formal way. And while, like you say, pitch competitions exist and they are around, in my experience, they've always been connected to colleges or universities. Like that's kind of that environment. I mean, maybe you get those in other areas, but that's been my primary exposure to it. But the point here, and what you started off saying with networking that I think is really interesting, is that that's not the typical medium over which you're going to connect with investors. It's going to be much more informal. It's going to be much more haphazard, serendipitous type encounter rather than a very formal type situation where you submit an application or a pitch and then you get up and you do it in front of a crowd kind of thing. Do you want to speak to that a bit?
Sure. And I mean, those do happen. And there are angel groups in Canada and the US that will take formal applications. You have to apply and probably do a practice pitch for. And, I've been in front of a few of those groups myself. There is some value there. But for the most part, especially with angel investors, they're really people who have high net worth who are looking to invest in people. And sometimes they'll be part of a group. Sometimes they're just individuals, and you need to reach out and network with them. But I'll tell a story. So back to pitch competitions for a second. I was in Berlin in November at a pitch competition. It was a global event, and there were 100 startups or researchers that were pitching their idea, and only 3 winners. So you weren't going there to win. So the value in that competition was to go off and grow your network and talk to people and learn some cutting edge research out there. And that's valuable as well. I mean, I don't want to discount pitch competitions, but I do think a lot of people will go there thinking, I have to win it all and take that prize money, and that's what's going to launch me. You're pinning your hopes on a lottery at that point. I mean, skill is involved for sure, but you can't control that environment. You can control an investor meeting to some extent, but a competition, it's an artificial format at the end of the day. A very, very good one, but it's not necessarily where the dollars are.
Yeah, I would agree. I mean, there's a lot of parallels between, I also sort of do videos and things on helping younger people sort of like get a job, like how you go through the process of getting a job. And there's many different ways of doing it. And there's the sort of formalized approach where, a company posts a job and then the person applies for it. And it's very formal. They come in for interviews and all that. And they're going up against maybe 100 other candidates. They're all competing for one job. And that's the formal way of doing it. Very formal. And the competition is very tough. Or you could sort of do it the alternate way, the alternative way, the backdoor way, which is networking, where, the company hasn't posted a job, but there's a hiring manager somewhere that's thinking, I really should hire somebody, to do this, but they haven't actually gone through the process of posting it and all that. So if you connect to them through networking and you say, hey, looking for a job, right? I can do this really well if ever you're looking for that. And it just so happens to reach the ears of a manager who is happening to look for that. Your competition, you might be competing against perhaps one other person for that job. And the way you connect with investors, I was always under the impression through my some experience I have and talking to others, that's very similar to how you connect with investors. You don't usually do it in a very formal way by doing pitch competitions and stuff through schools and things. Because as you say, the competition is very, very tight and it's a kind of a little bit of an artificial situation. Most people seem to connect to investors by doing a very informal networking type way of connecting those two people. And it's very serendipitous. One person just happens to have some money on their hands that they're curious about a certain industry. They'd like to get into it. And then there's a person who's thinking of starting a business, trying to start a business, who wants to go into that and was looking for an investor, and they just happen to connect. And that's all the success stories I've heard. They seem to be that latter category. Would you kind of agree with that? Has that been your experience?
Yeah, absolutely, Bill. The big thing is that investors, you don't necessarily know, especially at an early stage, who may or may not be an investor. There may be someone who's just, a professional with $10,000 that they want to invest into something or someone, and that person might surprise you. That surprised me in the past, who might be willing to invest in a startup. It's not necessarily going off to a professional organization or to a VC fund. And that's why that networking is so important, because you need to go out. It's a numbers game. If you're looking for 2 investors, you probably need to talk to about 100 different people. And that sounds daunting, But really, it's also an argument for why you need to start sooner rather than later in building up those relationships and going to those networking events. And there's a whole funnel that you can go through down those steps to now get to some qualified leads on investors. But the first step in that is putting yourself out there, because if no one knows you exist, then that funnel doesn't even start.
Yeah, you said a great thing that I just want to capitalize on, and that is that you don't know who's an investor and who isn't. That's the nature of this. People don't have a big sign that says investor, because if they did signal that in some way, they would be inundated with, everybody would be proposing or pitching something and trying to get them to to look at their idea or whatever. So yeah, usually these things are done on the DL. I mean, nobody really discloses that. So if, like, to your point, if you're networking and you're sort of trying to connect in those circles, it's like you said, it's a numbers game, that the odds are, if you keep putting yourself out there and you keep sort of almost broadcasting in certain circles, that after a certain amount of time, just through random probability, you will connect with somebody who has exactly what you're looking for. They complement you. And that's what it's all about. So something else that we were talking about earlier was the pitch competitions, and the fact that the pitch competitions, like I think you mentioned, are good practice. They get you to really learn how to do an elevator pitch and how to propose your idea and what questions to expect. Were doing pitch competitions good practice for you?
Absolutely. Yeah. I spent years doing competitions and going in front of judges and getting used to public speaking and speaking in a stressful and time constrained environment. Mm-hmm. It helps because you have to refine your message and you have to go further. And sometimes you have a bad pitch, and I can think of more than one where I just had a terrible, terrible day. And you learn a lot from those too, because you have to, at the end of the day, pick yourself up by your bootstraps and then just keep going. I remember once I had a terrible pitch in the morning and then another pitch in the afternoon, and I had to just dust myself off and go back in and pretend like the morning hadn't happened for that second meeting. And you need to practice that, because you need to hear that no a few times, because then it just starts to like water off a duck's back. It just starts to go away, because you're going to hear no a lot. And I can tell you that, and I can tell you that over and over and over. But until you start hearing no, that's probably not going to click for most founders. It's psychologically frustrating to hear no about your baby and your company. But it's going to happen. I can guarantee it for all of us. If we're talking to investors, you will hear no. So start getting those no's out of the way, because your first one is not going to be a yes. So that practice, if it's in a pitch competition, it's good because you have some rubrics and some guidelines, and the judges are generally not necessarily out to get you. It's a pretty supportive environment. So there's a lot to be said for that.
Yeah, that's a great element that you brought up. You're going to hear no. You're going to. It's like getting a job. You're not gonna get hired. Chances are, the odds are, you're not going to get hired at the first interview you go to, and you're going to feel rejected because it's basically a no. And but I think most people can relate to just getting a job. You learn by doing it. The more you do, the better you get. And the more no's you get for different reasons, the more you learn about, okay, mental note, don't say this, or, mental note, next time do this, right? You gradually improve. So you learn by doing, and like you said, it's a numbers game. The more you do of these networking type events and encounters and try and connect, the more of those you do, two things. Number one, you increase the odds that you're going to connect with a potential investor. And number two, you really refine your pitch and your presentation, how you present your idea and what you say, so that when that opportunity comes along, you're like a well-oiled machine. You've been asked hundreds of questions. You know how to answer them all. You know how to present yourself. You know exactly what you're asking for. So practice makes perfect. I see in the chat here, somebody says, going back to elevator pitches, is it more important to impress / suck people in, or to convey actual information. I think my elevator pitch would be more effective if I don't go into too much detail. You want to take that, Matt? What do you say to that?
Caller, you're absolutely right. Don't go into technical detail. Leaving that impression is everything. You're not going to make a sale on that first meeting because your elevator pitch, you're 15 to 30 seconds. And you want to say three things in that. Hi, here's me. Let me introduce myself. Let me introduce my company and why it's relevant to you. And what we call a call to action or a follow-up. I want to meet for coffee. Can I have your phone number? I want to send you more information. I'd love to send you my deck. That's it. And if they have questions at that point, they will ask you. But you're going to give them information overload because you think if you're at a networking event to talk to an investor, odds are there's another 20, 30, 100 people who are doing the exact same thing. And at the end of the day, that person who's been approached by so many different founders and individuals, and all they have to remember you by is a business card and the impression you made, that better have been a good impression. And if you inundated them with your details and your cash flow and how great your tech is, that starts to all mold together at the end of the day. It's not necessarily going to help stand out, even if you have the best tech in the world. You're not going to make that sale right away. So what you need to do is just make sure that they remember you the next day. Yeah,
great advice. Someone else says, what is your step? Okay, so I would interpret that as asking, like, what actually do you do, perhaps, to do this? We've talked about networking. Let's get into the details. I'm a very detail-oriented person. What does that actually mean? Well, you can give me your sort of take on it. I think everyone will have a different take on this question. For those of you who've heard my podcasts and things before, you know that I've done a lot of informational interviews. That's how I kind of did a lot of networking, as opposed to going to events and sort of being stuck in a room with like 100 other people and just having to connect with it. That doesn't come really naturally to me. And I think, Matt, you and I have been at some events occasionally. We've found each other in the same room and with 100 other people. And my problem is that I may have a conversation with about 5 of them over the course of an evening. And the other 95 I just didn't get to. But I would say get on LinkedIn is the number one thing. Like for me, that's kind of what I did. Now, once you're on LinkedIn, there's many things you can do. You can do like I did. You can send out invitations to connect with people that you want to connect to. In my case, it was CEOs, board members, things like that. And then if you have a connection, you can then send a message to them and say, I'd very much love to sit down with you for, 30 minutes. I'd very much like to get your expert opinion on this question. Would you be able to spare me some time? You name the date, time, place, and, I'll be there. And I did a lot of those. And that's how I did networking. I'm a raging introvert, I might add. So that's not the way that most people do it. But there's other ways to do it too. Like Matt, you mentioned the meetup groups. I never really did that. I know it's a thing. Have you done that a lot yourself? Like the meetup groups and connecting with peers that way?
Yeah, so I'll interpret this question in terms of an in-person event and the steps you take. I will do it one of two ways. The first is to find someone who I know right away who can introduce me to other people at that event if I don't know many people there. Think of it like as an ally, or this is a bad analogy, but you want a wingman to come and just help make those introductions, because it's easier to get inside a conversation if someone else has made an introduction for you, and it's validation for you. But the other thing to do is honestly just pluck up your courage and go and shake hands with people. And it's a networking event, and people are used to it. They won't take offense if you're coming in and just saying, pardon me, can I have 10 seconds of your time? Saw you across the room. You're someone that I have been meaning to speak to. And then you go through your process. So both of those will work. There's no really wrong way to do it. But for me, my call to action is always, I would love to send you more information about what we're doing and how you can help. So can I get your card or your contact information, and I'll send something. And I follow up as always the next day, if not the night of, send the information. And what I do is email and then follow up with a call a day or two later. And then if I don't hear from them, I'll wait 3 or 4 days, and then I'll email again, and then I'll call again. And you do that over and over and over, and you'll know pretty quickly whether that's a relationship that will be maintained over the long term or not.
Yeah, it's interesting. I know that, I mean, networking is a huge topic, and many people, it's almost like talking politics or religion with people. You know, they have their own belief and structure on how it's done, what's the most effective way to do it, that sort of thing, what environment to do it in. And I imagine, you talk to 10 people, you're going to get 10 different answers on what's the best way of doing it. What's clear to me is that there's many ways of doing it. I personally don't know if any one way is more effective than others. It seems like you can really do this your own way, as long as you are connecting to people, and it's hopefully relevant people. You fish where the fish are. You go to events and you connect with people that would have disposable income. They are in the business world, things like this. They may or may not be part of an investor community. I don't think they necessarily have to be. A lot of investors that I've heard of are not part of a real formal investor community. They're just, like you mentioned last time, high net worth individuals, doctors, this kind of stuff. So it's just a matter of connecting with those people. Can
I jump in?
Sure.
Quick?
Yeah, go ahead.
So regardless of whatever strategy that you decide to pick, and try them all out to get a comfort with what works best for you. But the one thing you need to do is make sure that you're closing the deal in some way. So Canadians especially, we're very polite, and everyone says, yeah, let's do lunch. Oh, I can't wait to talk to you. Let's do lunch is just polite Canadian speak for go away. Like it's not good enough. If someone says, let's do lunch, say, great, when works for you? Let's set a time in our calendars. Let's do this right now and confirm something. If they don't want to do it right now, follow up. And that's what your follow-up email is. You said, let's do lunch. Here are some dates I'm free. When works for you? If you have the means to do so, lunch is on me. I'll meet you wherever you want to go. But we're very good, I think, at networking, at just saying, oh yeah, we'll keep this going, and then it never actually goes anywhere. So that would be my one caution, regardless of how you're doing it, whether it's digital, phone, in person, just make sure that follow-up is happening, because you want something tangible and concrete out of it.
Yeah, definitely. I mean, something that I used to do was I would keep it completely open-ended. I would say, you pick the date, time, place. Tell me what's convenient for you, and I will move anything around I need to, and I will meet you there. The other thing that my personal take on it, I don't know if this is universal or not, it might not be, but was that if you're meeting someone for the first time and you would like a follow-up meeting, people would generally be more okay to a coffee as opposed to lunch. Do not ask. One of the rules that I kind of followed was, do not ask someone for the first time if they will do lunch with you, because we don't want to have lunch with a stranger. We could have coffee with a stranger, but we don't want to commit to, having a sit down meal with a stranger. That's just little, that's just, I know that's neither here nor there. Someone says, it's a relief to know I don't have to attempt to make stats and balance sheets sound fresh and exciting when first meeting a potential investor, and then little smiley face.
Well, they're never exciting. No. I don't even think a CPA thinks a balance sheet's that exciting, but they're necessary, and you better make sure that you have them for when that follow-up meeting does happen. But no, and that's a trap I think a lot of founders do fall into, is they want to just have a word vomit of all the information they can about why their company's so great, and I think it's a trap. That information overload will overwhelm the listener, and you say so many things that none of it gets retained. So yeah, balance sheet certainly falls into that part.
Yeah, and then just to speak to that very briefly, I mean, if you're looking at this from a purely financial perspective, investors are looking for a return on investment. Okay, now for entrepreneurial type ventures, it's considered very risky, and it is very risky in the sense that most entrepreneurial ventures do not work out. They do not make good on their projections of how much money they're going to make. So in order for this to make sense to investors, the return has to be high. So what that means is that if they put in, a certain amount of money, say, I don't know, $20,000, whatever it is, they are looking for, they're not going to be looking for like 5% interest in a year. this is a risky endeavor. They're going to be looking for, double their money back in a year kind of thing. I mean, it's that's the nature of it. So part of doing this is for the investors to trust you. And one of the areas they have to trust you in is that you can make money. And in order to, start to convince them of this, you have to be able to show financial statements and projections and things like this, and being able to back it up. So they could ask you, where does any number come from? They could ask you, why do you say that number is going to be this instead of something else? Prove to me that, you know what you're talking about when you say you're going to make this much money. That's a piece of it. But I think something that we should talk about today that's very important when you talk about investors is trust. Mm-hmm. You can say whatever you want, but if they don't trust that you know what you're talking about and they don't trust that it's valid, it's of no avail, right? I don't know if you want to speak to that topic.
Sure. Yeah. Well, I mean, we've talked about it before. I mean, financial projections, it's just a game. It's not real. And you as the founder knows it and the investor knows it. No one knows what a 5-year forecast is for a startup. That's just, it's an exercise in absurdity. But what they're looking for are your assumptions. How many sales do you think you'll be able to get? Have you budgeted appropriately to earn that amount of sales? What is your marketing strategy? What's your growth plan? What new markets are you entering? And how does all of that feed into your financial projections? That's what matters. It's not the numbers themselves. And this is something that's very different between Canadians and Americans. And without going into the rest of the world, but that's relevant to us here. Canadians will be very realistic in their projections and say, yeah, I think by year 5, we'll be doing well, maybe a $10 million company. Americans don't want to hear that. I would add another zero.
Think bigger.
You add another zero behind your projections by year 5, at least, if not more. Americans want to build unicorns. It's a $1 billion valuation. And that means you want to be earning probably 100 to 200 million in sales in 5 years. Now, are you actually going to get there in 5 years? Probably not. That's a rare thing. But every other company, if you're looking at American investors that you are competing for those investment dollars for, they're all saying that they're going to be earning $100 to $200 million in 5 years. So you disqualify yourself because you're seen as too small potatoes to an American investor if you're not being aggressive enough. So to my fellow polite Canadians, push the envelope, add some zeros.
Yeah, that's a great point. I mean, it's like anything else. You have to tailor your message to your audience, and some investors, they think like that. I haven't dealt with those type of investors personally, but I know that they're out there. I've heard horror stories. I've heard people giving feedback of, going up and doing those kind of pitches. And it's a very real thing. And, you need to know what people want to hear, basically, right? That's what it comes down to. And there is definitely a culture difference between Canada and the US when it comes to this kind of thing. But I think that, first of all, I wanted to get back to trust. It doesn't matter too much what you say in a sense. It's whether the investor believes that you know your stuff. Because imagine Steve Jobs or Jeff Bezos or somebody came and said, like, okay, I'm looking for investors. I'm going to do a new venture. I don't know what it's going to be. I don't have any of the details worked out. I don't have any financial projections of it, but I figure it's going to take about, $10 million, and it's going to be in this industry, and it'll pay off in the next couple of years. Now, if a person you didn't know said that, and you were an investor, you would laugh them out of the room because it's ridiculous. But the fact that it's Steve Jobs, the fact that it's Jeff Bezos, and if you look at their track record, you look at their accomplishments, they have indicated that they know what they're doing. And a lot of people will buy into that. I mean, this has happened time and time again when you look at the financial industry. It's based on this reputation, right? And whether you know your stuff. And there's a lot of people that have gotten into a lot of hot water because they threw money at something that was ill-conceived based on the fact that it's being led by a person who has a track record of success. So you figured you couldn't go wrong, right? I don't understand all the details, but I don't need to understand the details. I mean, I just trust that Steve Jobs knows how to sell something, right? So the reason I'm bringing this up also is because we talked in the beginning about the venue for how to connect. You know, one option was doing networking meetings. Another option was doing pitch competitions, right? If you go to a pitch competition, it's a little bit of a different environment. Everybody's expecting you to pitch. Everybody knows that you're greedy for money and they're very, very skeptical. If you do the alternative where you do the networking type connection and you're having a casual conversation with somebody else and you're not necessarily, you know, like asking for money right up front, you're just talking about something. The other person, their guard is down. They're not, you know, they're not having to defend against, you know, bad salesmen, basically, you know, and the trust is different. It's almost like the difference between a solicited, you know, proposal and an unsolicited proposal. So I don't know if is that a dimension that that you have an opinion on, or that you've found?
Well, I mean, yes, absolutely. So they need to not only see you as part of the company and as the face of the company and part of that brand, but also as a person that they can have a conversation with. Especially for early stage founders, that's really, really important because you're going to be having lots of conversations with them. So speaking their language is going to be very important, which sometimes is hard. I mean, I have had to learn a lot of engineering parlance, and I'm not an engineer, because if I'm going into a room where people have technical questions, I need to be able to answer those. If I'm in a room where people want to talk about sports, and I'm not the biggest sports fan in the world, I still have to be up on what my hometown hockey team is doing so that I can hold my own in that conversation. So that is all towards building trust. And not just for you as a person, but also that you understand how to hold a conversation, because what investors are looking for is that you have that charisma or that grit, or there's so many different things you can call it, but you don't just need to impress them, but you need them to believe that you can impress others, whether it's customers or investors in later rounds or whatever the case might be. But that's very, very important. So it's sort of like an audition in that perspective, that you need to put your best foot forward, not just for that transactional relationship that you're trying to build in the short to medium term, but also demonstrating that you have long-term ability to go out there and, you know, woo the crowds.
Yeah, definitely. Definitely. I agree wholeheartedly with that. Now, just looking at some of the things that we had here, 30-second elevator pitch. That's something that pretty much everybody needs to have. You need to be able to bang that off at a moment's notice when you're not expecting it. What do you want to speak to that, Matt? Like, how do you learn it? Where do you use it? What's the importance of it? Like, do you want to get into the elevator pitch?
So it's your calling card, right? So you have a physical business card that everyone should have, even in the year 2020. You should still have a physical card because it's a memento that someone will take away. But you want to practice your verbal calling cards that leaves an impression and leaves a call to action. So and probably 30 seconds is too long. I would start off with something that is open-ended and impactful. So, for example, you would say, "Hi, my name is Matt. I'm CEO of ioAirFlow. We're a software company that helps commercial buildings become more energy efficient. I've been meaning to speak with you about what we're doing and where we'd like to go, and I'd love to send you a little more information. Can I have your contact?" And that was maybe 10 to 15 seconds. Very straightforward. And one of two things will happen. The first is they'll walk away because they're not interested, and hey, then all you've wasted is 15 seconds of your time. Or they will immediately say yes or start asking more questions. And that's when you start to get into the rest of the details. But that first interaction needs to be memorable, impactful, and open-ended.
So it's almost like an introduction. It's not really a pitch. It's just an introduction to who you are and the nature of the interaction that you want to have with that person, right? Like you're not pitching a business idea. You're just sort of saying, this is what I would like us to talk about, and this is how I would like us to interact, basically.
Well, and you may want to get into more detail depending on who you're talking with about your value proposition and why it matters to them. But what you really want to do in that first interaction is make them understand that they are an important piece of whatever it is you're planning. So it's the introduction and connection. Everything else after that, you can talk for hours. I'm sure all of us can, about our company and how great it is and the traction and all of that. That's all good. But what really matters in that first moment, because people will have an impression of you, whatever the science is, I think it's like somewhere between 7 to 15 seconds. If that's not positive, you lose the rest. Yeah. So if you start going in and saying, I got this great tech and it's cutting edge software and we have this machine learning tool, and they don't know what that means, they're going to walk away.
Yeah.
So,
yeah, makes sense.
Yeah. That connection is what matters more than anything else.
And that's true. That's an element of entrepreneurs that are more of the operational engineer types. They want to talk about the technology. They want to talk about the, what they're doing, all the technical details of it. And that's not necessarily what investors want to hear. They want to hear what's the impact, what's the industry, how is it going to make money, and how much money is it going to make, essentially. I mean, that's really, I think, what they're looking for, as opposed to the technical details of how it's done, right? Would you would you agree with that?
I agree, yeah, and most of that won't happen in that first interaction. So you come prepared, bring your information with you in your mind, and make sure you have some important stats memorized. But don't come with your deck printed out or on your phone ready to walk through everything there with them. It's just not the right venue. So unless someone really wants to find a quiet corner and have that conversation with you, which will happen from time to time, but it's the exception, not the rule. So plan to talk to someone for no more than 5 minutes. And the other thing too, if an investor really is interested, you want to sit them down one-on-one to have their undivided attention. You can't necessarily have that in a networking event, because other people may come and interrupt you, or the agenda for the evening might interrupt your conversation, and that's so much worse to have things cut off halfway through.
That's a great point. I'd like to add that's really insightful. Yeah, that's the nature of that stuff, from what I remember when I was doing it years ago, and you're absolutely right.
Yeah. So what you really want to walk away from after that 5-minute interaction is a promise to follow up and then have that half-hour, 60, 90-minute conversation. And the other thing too is, if you're at a networking event and it is a numbers game, if you're talking to one person for 30 minutes, you could have talked to 5 other people in that same time. Yeah,
exactly. It's a matter of sort of using your time effectively. So what materials would someone have to do this? You have that introduction you just mentioned. Okay, so you have to have that pretty well automatic. You have to have a very brief introduction, grab people's attention. What else? Would you have to have a rehearsed elevator pitch where you talk about what you're looking for and how it's going to lead to you becoming a success and the company becoming a success? Would you need a pitch deck? Would you need anything else? What's the materials that you're going to arm yourself with to go after investors?
So your main tool it would be your deck, I think, and your pitch deck. I like to have 2. I like to send one in advance that has a lot of content in it. And it still has to be easy to read. I mean, if you're using PowerPoint at 8-point font, something's gone horribly wrong. But something that has a lot of content in it, and there's a great method out there. There's a man named Guy Kawasaki, and he has his 10-slide template for any startup to use. I recommend it very highly. It's a very effective way to get your message across. That will be your informational deck. The second tool is your story. And I have a second deck for that story. I don't like to go the same way, because I don't want to necessarily get into the details and the numbers when I'm telling the story and value proposition of my company. And so what I do with that is place them in the environment of the problem that I'm trying to solve. So I start something off, and again, those first 30 seconds will help draw someone in, or might scare them away. So you need to get them emotionally invested in what you're talking about. And there's so many different ways to do that. And this is, again, one of those things where 9 people will tell you 12 different strategies. For me, I really like the connection of trying and place them in that space. So imagine that you have a building that people are getting sick all the time, and your energy bills are through the roof, and you just don't understand what the problem is. That's relevant. People can understand why that might cause you grief. and you can talk about the impacts of that. And that's, of course, the problem with the solution that my company is solving is that. So what we need to do then is tell the story about how we can get you from that pain point into a healthier, safer, more cost-effective place.
Okay. Yeah, makes sense. So
and
would
then
you have
invested there than numbers?
So would you have 2 pitch decks ready to go? Like you have your A and your B. Is that what you recommend? Like, for most people are going to have that.
So what? Yeah. So not to get. This would be easier probably if I had a whiteboard or something, but my informational deck is what I send in advance all the time so that if someone wants to read, they have all the numbers there in front of them. On my verbal deck, I have a massive appendix. So that way I can easily go in and pull from the informational deck if I need to without having to switch between decks, because that doesn't necessarily look as professional. And if you're using a laptop or something that you can go in and a mouse and not just a clicker, create an appendix that hot links all your slides back to that one spot. So you have kind of a central hub of where all your slides are.
Okay, that makes sense. Now, is this something you would keep with you, or this is something that you would send to people outside of a networking event if they want to know more and you want to set up a more in-depth one-on-one type meeting?
I would never share the verbal deck unless I was there to verbalize it. And that would be what the informational deck is for. Yeah. But again, that's just my own strategy. I know other people just have one deck. And that works too. It depends on how you like to tell your story, how you like to pitch, how technical your solution is, and how much background information can be helpful for the recipients to learn and read and understand before you get into your pitch. So in our case, it's a highly technical solution. So I've found it easier for me to send a little more about the technology in advance. And that way I don't have to explain it halfway through, or else people will interrupt and say, sorry, I'm not sure I understand. How does this work? You don't want to be answering those questions when you're talking about your market potential or your customers or your traction. That's if someone says, I'm confused on how this works by the end of your presentation, then something's gone horribly wrong.
Yeah, definitely. Okay, that's good. I mean, that's these, and for those of you who don't know, I mean, if people are just starting out, Google pitch deck. It's like a slideshow. Basically, you could do it on PowerPoint. A combination of slides that have different things on each slide. There's a certain number of slides. It's a standard format, and this has come in a little bit after my day when I was sort of doing this. No one had heard of a pitch deck. It was, wasn't really a thing yet. And then this came in, I believe, in the mid 2000s, right? They came in with the idea of a pitch deck. It was some guy invented the pitch deck and that word and sort of evangelized about it. So Google that if you don't know what that is, and it's recommended reading. Now, another thing that I think is important for a lot of people is the idea of having an email list or a contact list of investors. And, what you would do as you build that is you then use it for specific purposes. Do you want to speak to that a little bit?
Sure. So as you're building an investor list, and again, the takeaway from those first contact meetings, you want to stay in touch, then you add them to that list. Think of it like a monthly newsletter that just shares your traction, but it's geared specifically towards demonstrating that you're a company that someone may want to invest in. So it's not necessarily about the marketing fluff or here's the about us. Your investor newsletter is here's our traction. Here's our sales, here's where we're going, just a reminder about our strategy and what we're doing to get there. And all you need to do is keep them informed and keep yourself top of mind with those people. And a monthly newsletter will go a long way for that. And when I say newsletter, don't worry about formatting it too fancy or anything. An email from the founder will be more than enough.
Yeah, and that goes to also this idea that like in marketing, this idea that, multiple exposures lead to results, right? If someone, if you were like, think about this from the other side of the fence here. If you were an investor and someone that you've never heard of shows up and makes this big flashy sort of introduction and pitch, and, they make an ask, and then they go, and then you might say no, or I'll think about it. And then they go away and you never hear from them ever again. I mean, does that fill you with a lot of confidence? It usually doesn't, right? Now, Alternatively, if you have someone that's in the local community, they go to events, they make connections with you, they are connected to people that you know, you've seen them multiple times in person, you've seen them, maybe the newsletter idea you're talking about, that you've heard how their ventures are going, you've heard about the progress they've been making for maybe over a year or a couple of years. And then maybe you happen to meet them and they give you a pitch and they say, I'm doing this and, I think you should consider it. And, here's how it works. Let me know if you would like to, sort of learn more and jump more into this. At that point, you probably have more confidence in that they're legitimate, that they know what they're doing, because of the longevity and the number of exposures you've had. So I think when you talk about the email list, I also think in those terms, it legitimizes you in a way, as part of a side effect to it.
And to go back to what you were saying before about trust, it builds trust because it shows you're not just a flash in the pan. You're not out to make a quick buck. This is something you're actually building and you're seeing success over time, and they can look back and they can quantify your success.
Yeah, and it might be based on this assumption also that if you hear about someone that's trying to do something entrepreneurial and they've been doing entrepreneurial type ventures for the last 5 years, perhaps they're not a complete total failure, because if you are a complete failure, if it goes absolutely nowhere, most people don't keep trying over the long term and have it go nowhere. They either give up or they turn it around so that it becomes a certain measure of success. So it's also based on that assumption too. That's, I think, the mechanism that maybe legitimizes it a little bit, or legitimizes that person. Something else we're talking to also, and this is a great topic here. It talks about when to ask or when to not ask for money, right? There's a bit of a protocol to this. Do you want to speak to that?
Sure. So good rule of thumb, don't ask for money when it's at a crisis point of you needing it, for a whole host of reasons. But if you're asking from when you desperately need money to make payroll, first you're coming from a position of weakness and desperation. Those are strong words, but if you're in survival mode, you're less likely to get investment. So shy away from that. And sometimes diligence will take longer than you have runway available in your bank account. So don't necessarily wait for that. One of the very odd things with investment is that you'll probably get investment offers when you least need it. So when you have a lot of revenue and you're getting sales growth, and then all of a sudden someone will say, I'd love to, give you some lighter fluid in terms of a capital injection. What do you say? And you say, well, I don't really need the money right now. But take those in stride and consider, when and if and when that can help kickstart your plans and go back to your strategy. There's no bad time for that. But if you are a pre-revenue company and you have some really great ideas, but you haven't necessarily developed something that's ready for the market yet, take it from experience. That's a very hard sell to be asking for money. And if you're spending most of your time trying to raise equity or investor capital without, demonstrating you have something that's market ready or market viable, it's going to be a big drain on your resources, and B, it may not be successful. Some times are better than others for that. And again, trust and relationship in you as an individual will make a big difference there. But it's a tough sell, and especially these days when the market's perhaps a little more conservative and people are holding their wallets just a little bit tighter. You'd better prove that you've taken a lot of the risk out of this gamble.
Yeah, definitely. That has been a recurring theme of investment for the last several thousand years. It's when you most need the money, that's when you don't really get investors. Investors tend to show up when you don't need the money, when you're a success. And that's precisely why they are showing up. They are showing up because you have revenue coming in, and because, it's much less of a leap of faith at that point. So that's definitely a recurring theme. And knowing this, we can, usually tailor what we do to allow for that. Secondly, you were talking about, when investors come in and, they're very conservative, and you mentioned, the market's very conservative right now. Generally speaking, investors are extremely conservative. Think banks, or institutional investors are the same way. They base their projections of what's going to happen based on what has happened in the past. And so, like you mentioned, if you're a pre-revenue company and you haven't yet made money, it's very hard to prove to somebody that, you're going to be making money. So it's going to require a little bit of creative thinking there to try and convince somebody that you know what you're talking about. But generally, that's kind of the name of the game. For people that are just getting into this, they're starting up a company and they don't really know the world of investors. They don't know how investors think. There are always exceptions, but generally speaking, people are very conservative. So if you want them to believe that you can do something, you have to point to accomplishments in your past that demonstrate that you can do it. It's pretty hard to argue with someone who's done something. Prove to me you can do something. Well, I've done it. It's a pretty short argument, right? If you haven't done it, then you can try and persuade and convince, and in the end, the other person says, "No, I just don't see it." So that's the attitude that you're going to be that you should, in large measure, expect. There are always exceptions, especially in some startup type financing, and maybe that would be a good topic for a show: how to find, discover, and connect with those type of individuals. But that's definitely a part of it. Before I move on, do you want to respond to any of that?
Yeah, well, and talking to the right investors, I think also finding the ones who understand your business model. I mean, as a software as a service company, I've had investors ask me, like, what are your costs of goods sold? Man, that's not how that works. And some accountants out there might disagree with me, but if you don't understand, as an investor, if you don't understand the company or the model that is being pitched to you, you're probably not going to be a likely candidate to throw some dollars in anyway, unless you really believe in that person or have that trust. So as a founder, it is part of your job to make sure that you're talking to the right people. Yeah. There are a lot of people in this world who have a lot of money, but that does not mean they want to spend it on what you have to offer them. And regardless of whether you have the best solution out there, people who invest in real estate aren't necessarily going to, invest in a software company, even though they have a lot of money. It's just not what they want to do. And if you start barking up that tree, I mean, again, right, it's time that could have been spent talking to other people.
Definitely, yeah, and you're absolutely right. It becomes a question also not of whether the industry is going to be big, but it's going to be whether this particular entrepreneur is going to be big. If you are a investor that say you mentioned the software industry, you might have made your fortune in the software industry. You know it really well. You believe that money can be made in the software business. Now, does that mean that every single person that comes to you and says, "Look, I'm trying to start up a software company. Will you invest in me?" Are you going to invest in them? No, you're not, because although you believe that software is lucrative and there's going to be a return on it, you don't necessarily believe that that particular person is going to be a success in the software business. And in my experience, that's an area where more people need to focus when they're trying to get an investor. Yes, the software business is going to be big. You don't have to sell the investor on that. They're with you on that. But whether you are the person to do it for them, that's another matter. And that's what you're going to have to speak to. In the chat, we have another question from Andre, if I'm saying that right. I have a patent and I'm interested in a partner in Canada. What help can you offer if I can receive an email to contact you? Okay, I can't really help directly with that. Do you want to respond to that?
We can take that away, but so Andre, it sounds like you're probably what we call a tech founder. If you have the patent, you're probably the inventor. And if what you need is help on the business side, it's important to have that founder with business expertise. So someone who complements your skill set. I like to think of it as a three-legged stool. You need someone who understands tech, someone who understands business, and someone who understands the industry. And then finance is kind of a conglomerate of all three of those. So having all three of those in your company will go a long way. Tech in and of itself does not just sell a company. So it's important to understand your own skill sets and understand the gap in your skill sets, and then either find someone to help you fill those gaps in a founder perspective, or just get someone to help coach you along in those. Lots of different ways to do it, but certainly, I mean, we can take that away and see what there is to see.
Yeah, if you do want to contact me, I'll give you, just go to thecompaniesexpert.com and you can contact me through there. That would be a good way to do it. Do you want to give us your information, Matt?
Sure. I'll give you, the easiest email address for me is Matt, M-A-T-T, at ioAirFlow.com. And then you can also reach out on our website, ioAirFlow.com is simple. And then I'm on every social media network, so happy to reach out there as well.
Yeah, and what you said, I would like to echo your remarks on that. You do need a complementary skill set. Tech alone, it's good, it's a start, but it's not the be all end all. You need other things to be able to pull it off. And I agree with what you said. I would change it slightly. The three-legged stool for me would be what we're calling tech, like operations. Marketing would be the second one. You need someone that understands marketing. And then you need finance would be the third one. So it's a combination of those three coming together, result in success.
I can't believe there's not one right answer for this.
Huh?
I can't believe there's not one right answer for this.
Yeah, I know. Everybody's got their own take. That's why business is a social science, right? Everybody's got their own flavor of it. But yes. Okay. So, you definitely need to connect. And what we were talking about at the beginning of the podcast with networking, I had mentioned getting on LinkedIn. Matt had mentioned, like meetup groups and things like this. That would be the way to start to connect with a potential partner, right? You're looking for someone that is kind of in that world, but also has complementary skill sets. So that would be a great place to start. We talked about when to ask for money, that kind of stuff. We sort of touched on that a little bit, right? And just basically what to be prepared for, if you're getting into this world. I know that's kind of a very general type question, but do you want to give me your take on maybe someone just starting out, they're wanting to pursue investors? What should they be prepared for here?
A lot of long days. So you're spending your usual working hours at the office or in the garage or whatever the case might be, building out what you need to build. Maybe you still have a day job, and then your evenings, often you're at an event, and so the meals aren't necessarily the most healthy, and probably you may have one or two more beers more than you might have been planning to have in a regular week.
Drink a keg and then talk business. That's how it goes.
Well, for better or worse, that's the culture of business that we're in right now. So just be prepared for a lot of that and what you call schmoozing, and just go there, work the room. Even if you only show up for 30 to 60 minutes and talk to the people you need to talk to, that's good enough. See if you can get an attendance list in advance so that you can cut the wheat from the chaff and figure out exactly who you need to speak with. You go in, you get that done. And the other thing I would say as you're getting prepared for this life is make sure you have that balance. For me, I need downtime after events like this. Work that into your routine. The last thing you want to do is burn out as a founder. It is really important to protect your mental health and your schedule and make sure you're getting enough rest, because this is draining. It takes a long time and a lot of energy. And you need to make sure that your health still through all of this still comes first, even through those 70, 80-hour weeks.
Yeah, definitely. And I would like to say that, first of all, I agree with that entirely. It's an exercise, at least the way I would recommend doing this, it's an exercise in connecting with people in a positive way. Because, you mentioned some of the encounters, you got to drink and you got to talk sports and you got to, it all contributes to people having a rapport. When you talk with somebody who's a potential investor, you don't want it to be forced. You don't want it to be awkward. You don't want it to be, it doesn't flow. You want it to be very friendly. You want ideally for the two individuals to click, to agree on things, to be like-minded in a lot of respects. Because thinking beyond the investment, like in the sense that they agree to financially help and essentially enter into a business partnership with you, the business is there's going to be ups and downs. There's going to be good times. There's going to be bad times. Things are going to get tense. And if you're in a relationship where your investors are very, there's not a great relationship there. They're more like bankers, it's not going to go well. And I mean, I've seen many different versions of that not going well, not necessarily through my own experience, but through some of the people that I've worked with. Their relationship deteriorates. There's blame. There's, broken promises. There's people that balk at, unforeseen circumstances and developments. They're like all this kind of stuff. And it's going to test any relationship. And if you don't have a great relationship where you both trust each other, you both respect each other, and you get along with each other, it's going to cause a lot of problems down the road usually. So that being said, when you connect with people and when you do this activity where you try and connect with investors and you try and find essentially a business partner, it should be done in a way where I would recommend you look at it by thinking like, look, I'm going to go down to an event or I'm going to connect with people and I'm going to see if there's people there that I click with, that we really get along, and it's going to be a positive experience. I'll meet people that doesn't work, but I'm going to move on, and hopefully I'm going to find people that I click with, that I feel like I've got a partner, an ally. It's going to be us against the world, and it's going to be a very positive type experience in the end. And that's how I'd recommend looking at this, rather than, if this is it's a chore and I've got to go and I've got to put on a dog and pony show. And, I know it's easier said than done, but I would encourage people to try and think as much in that way as you possibly can.
Absolutely.
Yeah. So some of the Audrey writes, please write your contacts. Okay. Well, so we said them, but I'll put them in the, I'll at least put mine in the description. I won't put your email address.
I have mine too. So no problem.
But Matt is the CEO of a company called ioAirFlow. If you go to Google and you type in ioAirFlow, I believe your company comes up first. So it'll
be hard to find.
Yeah. So through the company page, you can see Matt's email address. That'll be a way to contact him. And I am thecompaniesexpert.com. So that will be in the description. Any last words, any concluding words to send us off, Matt, on this topic?
I just keep in mind that it's a long-term process. Don't get discouraged. Just make sure you have your strategy, you've prepared accordingly, and you've practiced. And if that happens, and you go out there and you put yourself out there enough, if you have an idea that people want to invest in, you will find it over time.
Yeah, practice makes perfect. Just and to conclude, not to totally repeat myself or anything, but if you go into this, if you've never really set foot in this world before, go in thinking, you know what, I'm going to learn something. This is something that I know nothing about, but I'm going to learn. I'm going to sort of get some clarity here. I'm going to learn how this stuff works. I'm going to make some connections, and I'm going to grow as a person and as a business person through this process. And it can be a very positive thing. Like anything, it's not going to go smoothly all the time, but in the end, this knowledge and having done this will help you. I've worked with a lot of people, and I'd much rather work with people that have tried this stuff and they've set foot in this world and they have an appreciation for it and they understand the protocol and that kind of thing, rather than people that have never tried. So it's a win-win. If you try this, even if it doesn't work out to get investment, you will win on a personal level, no matter what happens. So that's what I would say.
Absolutely.
So I'd like to thank you, Matt. It's great having you here. It's great hearing your perspective on a lot of things. And I think it's a very valuable perspective too, because you've been on the front line of this for the last few years. So it's great to, in a lot of ways, you kind of update a lot of my knowledge on it. So that's great. And I'm sure a lot of people have found that very useful too. So thank you very much. And for those of you that are here, I appreciate you asking questions in the chat. I appreciate you tuning in, and tune in Sundays. I will have something up on Sundays going forward at the same time. So I hope to see you there. So thank you very much, Matt. And thank you everyone for attending. You guys have a great week. Have a great day. And I will see you on the next one. Thank you.